let me help you. Let me help you help yourself here. Either way, you're going to be calling. You're going to need some help with your Medicare at some point. Please let me help you with this. As I'm just going to say this, my secret little goal by the end of this year, I want to help those of you in this community collectively save $10 million by literally calling that phone number for free help. That's my secret little goal. Let me help you save money. And again, let's see how many more millions we can save by the end of this year. All right, anyway, let's pop this article up right here, right now. Feel free to read through the details on this. I'll explain exactly what I want you to know here. Okay, it all comes down to the big legislation that was signed into law last year in the summer, 2025. The big OBBB Act, right? Yeah, within there's all kinds of little goodies. For some people got nothing, right? It was a big old grab bag. Some people got wads of cash. Some people got nothing. And some people got a little bit of something. But those seniors that are 65 and over can now start taking advantage of the $6,000 and $12,000 additional deductions, which are honestly really, really helpful for a lot of people. Now, I'm going to be fair. I totally recognize this does not reach everybody, okay? I get questions on this. Some people reaching out saying, hey, but if I don't file a tax return, if I don't pay taxes, what does this do for me? I'm going to be fair with you. The blunt answer is nothing. Unfortunately, absolutely nothing, okay? Sorry that I have to be the person that tells you the bad news on that, but unfortunately, this is a deduction. It's not a check. They're not going to cut you a check on this, but it's a deduction to help reduce your taxable income and therefore reduce your tax liability to the IRS, which is really, really cool, right? Well, according to this article here, they're suspecting that upwards of 33.9 million seniors would potentially be eligible for this, which is honestly really, really cool. That's a lot of people, nearly 34 million people that they're suspecting would be able to take advantage of this to reduce their tax liability. Now, this is the extra $6,000 deduction, again, for seniors 65 and over that were at least 65 for one day in 2025. So even if your birthday was December 31st of 2025, when you turn 65, you would still potentially be eligible. Now, the reason that I say potentially is because I don't know your exact situation. Please talk to your accountant, talk to your CPA, but it all depends on your income. If your income as an individual was below $75,000 in 2025 as an individual, or $150,000 as a married couple in 2025, you're likely eligible. And again, provided you were at least 65 or over for a minimum of one day in 2025. Okay, this is the 4-year provision. It's only around for 4 short years. For tax filing seasons of 2025, 2026, 2027, and 2028. After that, it disappears. It's gone. And this whole thing will be gone, and then seniors will be on the hook for significantly more tax liability at that point because you won't have that extra deduction. But here's the cool part about this. This is on top of the standard deduction, okay, which was nearly $16,000 in 2025. But this is on top of the standard deduction, okay, plus the extra the extra age-related deduction. So as an individual, you could be looking at deductions of $23,000 plus for an individual, and as a married couple, you could be looking at over $46,000 worth of deductions, provided your incomes are below those thresholds. That's amazing. So again, what this really means is that if your income is, whatever it happens to be, for example, let's just say that you're an individual and your income was $50,000. Again, I'm just making up a number here. If your income was $50,000 in 2025, that means $50,000 of income, reducing off the $23,000 plus worth of deductions, standard deduction, age-related deduction, $6,000 deduction, adding up to over 23 grand. Now your income is basically $27,000 of taxable income at that point, reducing your income significantly. That's amazing, right? Let's just say that you're a married couple and you have an income of $100,000. And again, I know it's probably not very realistic. I'm just making up a number here for easy math purposes. But if you have $100,000 of income in 2025, again, I know that we're in 2026, but we're filing our taxes right now for 2025. If you had $100,000 of income as a married couple in 2025, and you get $46,000 worth of deductions, now your taxable income is at $54,000. Amazing, right? I mean, that's dropped it a ton. That's going to save you a lot of tax liability that you would otherwise have paid into the IRS. Now, why did they do this? It's a 4-year provision in exchange for no more taxes on Social Security. Remember, I've talked about this many times. Taxes on Social Security are still very much a thing. They did not eliminate taxation on Social Security, okay? They are still very much there. But instead, they offered this $6,000 deduction for seniors 65 plus for an individual and $12,000 for a married couple, provided both individuals are 65 or over for at least one day in 2025. And incomes are below the threshold of $75,000 for an individual and under $150,000 for a married couple. Now, there are phase outs. For an individual, it phases out between $75,000